The FCA is warning trading and stock apps to review game-like designs. Regulator warns that points, badges, leaderboards, and celebratory messages might lead to people taking on more investing risks. What do you guys think?
Yes, it's the FCA is clamping down on people being encouraged to make decisions with investments and trades and so on that are not in their interests. So presumably no more stocks for pool segments for us then in that case, where we try and hawk all kinds of rubbish onto you. But it's interesting, I think. I think what I'm most struck by with this is it reminds me of the fact that regulators, whether it's the FCA or the FCC over the other side of the pond or whoever the regulator is, they are invariably slow. With this kind of thing. I mean, where on earth were they when the meme stocks and SPACs and everything else were going around with this kind of idea? I don't mind whether you take a view on this, that what you should do is try and protect people from their own poor decisions, or whether you think, look, it's a market, people should be allowed to invest in dumb stuff if they want to, and so on, or do things that are not in their own interests. But one way or another, you can't, I think, leave it through all of the last couple of years that we've had and suddenly decide now that gamified trading and pop-ups encouraging you to do stuff with CFDs and so on are dangerous to people's financial well-being or something like that. The time for that was a long time ago, and I guess my main takeaway from all of this is if you are a stock market participant, and I guess a lot of people watching or listening to this show will be, you can't rely on anyone else to look after your interests here other than you. And that includes any of us, by the way, as well. We say at the beginning this is not financial advice, and it isn't. It's more or less just our thoughts that apply to our finances and portfolios and stocks and what have you. But the FCA seems to be very, very late to this party, is my main observation about this. Steve?
Yeah, I got really the same thoughts as you. Reading through the press release, you sort of think to yourself, we could have done with all of this, when everybody was sat at home with no job, being paid to sit on their asses and started becoming have-a-go traders, pumping stocks that were supposedly short and all the to-the-moon conversation. It feels like this kind of information has come out really, really late. And I mean, some of the advice in it that the FCA are imparting to app developers is really simple stuff. Like, you shouldn't be getting incentives to trade. Essentially, you shouldn't be getting. I mean, I don't know any apps that are giving in-app points for trading, but if you're trading to get in-app points, that just seems really, really, really strange. So the broker we use is going to fall foul of this because later on they say basically apps that some product design features could be contributing to problematic, even gambling-like investor behaviour. We expect all firms that offer stock trading to consumers to review and, where appropriate, make improvements to their products based upon these findings. So one of the things that they have pointed out is that even if you're getting market updates over notifications, they consider this a form of gamification. They consider this is something that you probably shouldn't be getting. But I wonder if it applies to people like like Hargreaves and people like that who have like a list of all the news underneath the stock as well. I wonder if that's something that they'll probably say, maybe. I mean, they probably don't help you. Let's be honest. When we talk about staying in touch with your stock, it very rarely means reading every single article that comes out about them because generally it's fluff one way or fluff the other. But I guess trading 2-on-2 for me definitely has to change that notification system because Absolutely. I mean, it gets on everyone's nerves. It's just telling you like Tesla this, Tesla that, and like nobody cares if you're not a Tesla shareholder. I mean, I literally don't care. You can turn all of those notifications off. You can go through and you can tick every single box, and it still sends them. So it's like I just don't. I don't get it. Paul, do you read them?
First of all, I want to touch on the FCA there and their timing. I disagree with you guys on that one, and it's very simple. I don't think this has precedent. I think that what we had in 2019 and 2020 was an influx of these new style of apps, and fair enough, they are very, very they mirror gambling and what we shouldn't be doing within the gambling industry as well. So, of course, the evidence to a point is there, but I feel like it's all anecdotal. And what you might see in this article that I've got up here is that This is based on they've come out with this information based on a survey of 3,000 users across 4 trading apps that they used, where they used the game-like mechanics. I don't know which apps they are. I don't even know if they're in the UK. But to make a decision like this and to avoid counter suing and things like that for sort of banning people too early without the evidence, they have to get the evidence behind them. They have to make it very obvious that people have lost money or have been drawn in by this gamification type thing. So I think this is probably the earliest that they could have started to say something. And let's be very clear here, they haven't actually made any decision here, and they haven't actually brought in any rule or anything. They've simply written a letter. They've kind of waggled their finger and said, okay, this is your chance to correct this. If you keep doing this, then we are going to have to lay some pipe on this one. But yeah, I think, first of all, on that one, I think the FCA has gone pretty much as fast as they can. However, in America, this has been going on a little bit longer. A lot of people out there say that Robinhood, which is by far the worst of any of these, as far as I can see, certainly the biggest, has created this gamification. It pumped the articles. It was basically sending you to Reddit and going, hey, look at what they're saying on Reddit. Quick, have a quick look. And every time you make a trade, it lets off like this little bit of confetti and it goes, poof, well done, you've done this. And things like that, making it celebratory are very bad. So it might be something that the FCA is getting ahead of the Americans here and saying, right, we see what's coming over there, we see what they're doing. It's only a matter of time before the British, who are a little bit more reserved over here, start doing that sort of stuff to make a bit of money. And yeah, so maybe they're getting involved a little bit earlier than that. But let's link it to the app that I think all 3 of us use, which is Trading 212. Do you think you feel over gamified in there? Because I definitely see those notifications. I think to myself, why the fuck do I need to know that gas prices have gone up 1% today? Why do I need to know that Tesla has gone down 7% today? And and then immediately as you click it, Trading 212 knows I don't use the CFD platform, and it takes me into the CFD platform. It takes me to that trade where I can simply buy it right there and get all like loads of panic. And then I get annoyed because I have to come out and go into my ISA and start looking for the stuff there. But yeah, what do you guys think on that one?
So you're exactly right about this being a kind of CFD thing. This is where Trading 212 makes its money from. CFDs, I'm 90-something% certain, are banned in the US. So that's why they have kind of more options trading and other ways for people to deposit money and transfer it to their brokers on margin, basically. That seems to be the kind of main issue here from what I can see of it. The idea is that Trading 212, okay, so they make money through their CFD platform. Their CFD platform makes them money as long as people trade often and big in terms of position size and in and out of stuff. And effectively what happens is they get money more or less the more often you kind of click buttons, and the more often you click buttons, because you can see here are the biggest stocks that have earnings coming up, and I think, I know, I'll try and make some money by betting that Apple's earnings are going to be better than people are expecting. The more Trading 212 kind of makes its cash like this. I don't think they're likely to be massively in the kind of headlights here of the FCA. I think Steve's onto something where he points out that this is going to be quite difficult to enforce because, to a certain extent, you owe it to people to provide them with information, or at least make information available to them. So think about Hargreaves Lansdown down the other end of the scheme. There's something, I think, there's nothing irresponsible, sorry, in my view, of saying, look, here's what a bunch of analysts are saying about this stock. There's, to an extent, you might well want to find that out as an investor somewhere else anyway. You may well want to read what the kind of bull case for something is if you're planning on either investing it or shorting it or whatever. But so that clearly doesn't come under the category of gamifying anything, and anyone who's invested on Hargreaves Lansdown will know it is not a good game or anything like that. It doesn't have any of the kind of flashing lights of anything of that sort. Doesn't even sound like one. So I doubt very much we're going to see anything particularly getting enforced here on any of the platforms that we see. And free trade also, by the way, isn't particularly gamified. It's a painful platform to use for kind of the opposite reason. It is not fun to try and do things on free trade. And in many ways, that's kind of a positive, right? It doesn't incent people to do things in the same sort of way. So I think with Trading 212, we're mostly going to be okay. It might be that we see fewer annoying ads kind of popping up, but I haven't looked at how they're doing as a company, and I wonder if less action on their CFD platform, which I would expect, might be bad for us on the other side of things.
Just before we jump into that, Paul, because I know you'll be itching to say that, FCA are actually laying some new pipe for this. So in July 23, we get the new consumer duty regulation that will be dropping, and that's got a lot of changes to how financial services do a lot of things, from how they price things to what level of understanding the consumer has, what level of support you give the consumer, and the products and services you're allowed to offer. So that's really interesting. The other thing I just grasped before we do shuffle on to how Trading 212 are doing is they also dropped the Financial Lives survey. I don't know if you saw that. There were some shocking statistics in that about how investors are actually being stressed at the moment. So they surveyed these people about how stressed their finances are in relation to and to their investments, and there was some shocking statistics. I've pulled one out of here just to show you kind of what it was like. 9% of the adults surveyed with investments have borrowed to invest, and 49% of them would not have been able to make the investment without doing so. So, this is why the FCA are acting, because, there's people here who feel that it's so urgent that they need to make these investments that they're having to borrow to do it. And I don't think that 9% would extrapolate out. Perhaps I'm not sure if that's a fair section. I hope it's not a fair section of investors. I hope that's somewhat skewed by being quite a low sample size.
That's a financial crisis.
That just shows you the level of and probably why the FCA is concerned. But go on, Paul. I know you're itching to talk about Trading 212's finance because you post in the Discord every day.
No. I'm about 3/4 of the way through a video on the latest finances for Trade 212, so I won't be
out next Christmas.
Oh yeah, I won't be going too far into it. But as of December 2021, it was pretty good, right? There's a lot of money there. I couldn't work out how much was made from CFD because they don't disclose it, but it's certainly very interesting to see what's going on there. I think. I want to talk about like the free shares and things like that, because that could be something. And also with Hargreaves Lansdown and even Vanguard, of course these are not gamified. You couldn't suggest they're gamified in any way, but what about like having celebrities on your advert and things like that saying, I invest in so and so because I do this? And I'm sure like eToro said something along the lines of, want to get into Tesla, do this. And surely that's like edging towards that financial advice, because you're mentioning one basic stock or the popular stock. And does it work like that?
It worked well for FTX, didn't it? They've done really well for their celebrity endorsements. But yeah, I just don't think any of that stuff should be really allowed. I just don't think investing in financial apps is the right platform for celebrity endorsement. I mean, when your average high quality fund manager fails to beat the S&P on a sort of like on a long term basis, then I don't think there's really any business for Sylvester Stallone telling me what stocks he's invested in. I don't see why we would want that. Why would we want confetti flying as we're making the trade? I guess is something in the psychology there works, right? We've talked about different colors being able to work in these apps that make you more likely to buy something. What if Trading 212 did something as simple as, when you're looking down the list of popular stocks today, one of them just wobbles a little bit. One of them just does a little wobble, and it makes your eyes just go straight to that, and they go, "Ooh, Tesla. I need to buy some more of that." And just things like that. They're all there. They all exist. Robinhood definitely does that. And it's a bit of a dodgy one. I think it's great. I think it's a great thing to come in. I think it is going to make investment companies think differently. I think there must obviously be some other stocks
some other brokers out there that the FCA are worried about, which I don't know about. I guess there's a lot of CFD only type trading apps out there at the moment, which must be doing far worse than any of the platforms that I've used, like Vanguard, Hargreaves Lansdown, or Trading 212. But I would say that Trading 212 is certainly one of the bigger fish in this that could be targeted, and maybe some of its processes like the ongoing notifications, and what do they call them, like on Facebook? They call them nudges. So it's the same with any games so if you play an app game on your phone, like Candy Crush or something like that, and it notices that you haven't played it for an hour, it'll give you a little nudge that says something along the lines of, congratulations, you've just found 5 new coins and you can use them now. And that gets you to go back into the game. I'm not saying Trading 212 does anything like that, like give you random stuff out the blue where you sort of gain points. But the nudges, it's definitely doing it.
Well, there's definitely something in investor psychology when you see stuff going up, you think, why wasn't I in natural gas? Do you know what I mean? It's just, I guess that's what they're playing on. I guess if you know investor psychology, which you would assume that the people designing these apps have at least a rough idea of what it is that we actually think, then I suppose you can play on those psychologies by doing things like trying to create FOMO or whatever.